Hello and welcome to week 5 of the course, our very brief 8-week course. We're on the back half of it at this point, so we've covered quite a bit of ground so far. So last week we talked about, as a point of review, we talked about asset valuation, different methods and ways of looking at that, and also talked about the cost of capital. Both are very important concepts to cover when we talk about kind of getting into the real heart of financial management, which we covered in chapters 12 and 13, where we start talking about budgeting and decision making. So if we take a look at chapter 12, some of the objectives that we have for chapter 12, so you want to be able to show how a capital budgeting decision represents a long-term investment decision. This is where finance matches up with the strategy of the organization. And we start to make financial sense of the strategy of the organization and the guidelines by which we make decisions. You want to recognize that cash flow rather than earnings is used for the capital budgeting decision. This is kind of an interesting one. Pay close attention to it. It's going to come in handy when we do our group project. I'm not going to give out too much information here, but just remember this is a good framework for us to sort of think about as we look at the topic of our group project. We want to understand that the payback method considers the importance of liquidity, but fails to consider the time value of money. So a lot of times you hear that used a lot, but you hear it referenced a lot, but in fact, in most financial decision making, it's not really used that much in terms of when do I break even or the payback. I want you to be able to recall that the net present value and the internal rate of return are generally the preferred methods of capital budgeting analysis. And I can tell you that's absolutely true in most situations I've been in. So take a good look at those and recognize that the discount or cutoff rate is normally the cost of capital. And it's an important number, sort of a constant that gets used in the different budgeting decision processes. So it's a really, this is a solid chapter. You learn a lot in it. And if you have any questions, certainly reach out. Then on chapter 13, we're going to talk about the risk, the concept of risk, and the capital budgeting decision. And, sorry, let me get us there. And then I can do this. Sorry, hang on 1 second. Okay, so our objectives for chapter 13 is you want to be able to explain the concept of risk and how it's measured. As we already have talked about several times, risk is an important element or something to be considered when we consider what we require from our financial decisions. So risk is an element that comes into play. We want to recognize that most investors are risk averse, which means they dislike uncertainty. That's obviously at a trade-off to return. So the investors that are willing and are less risk averse expect a higher return. So those elements come into play here as well. We want to be able to explain why investors will require higher rates of return from risky projects. And then there's, and this is kind of an interesting thing, and this is a very rapidly changing part of financial management, which is using simulation models and decision trees to assess the risk of an investment. Obviously, as we expand our technological capabilities and our ability to process information and analyze data, we're able to do even more robust, if you will, simulation modeling. And modeling has become a very important part of financial decision making. And then finally, we want to be able to assess the impact of a given investment on the total risk of the firm. And those considerations are definitely part of the budgeting process. So this is kind of getting into the heart of what financial management is all about. It's going to use a lot of the information we've learned about in previous chapters and kind of putting it to use, if you will. So I think you're going to like this stuff. Again, if you have any questions or anything like that, please let me know. And the best of luck, and we'll talk to you next week.